Dear class, today let us make a presentation on our preparation of financial statement. The financial statement is given by International Accounting Standard number 1 that set out the overall requirement for financial statement. This including their structure, the content of those financial statements, and the overriding concepts such as going concern, accrual basis of accounting, and the current and non-current distinctions. A complete set of financial statement comprises a 4 statement. One being statement of financial position. The second is the statement of profit or loss and the other comprehensive income. The third one is the statement of changes in equity. The fourth is the statement of cash flow. So a statement of financial position, this is one previously known as a balance sheet. It's a statement that reports the asset, liability, and the equity of the company on a given date. It provides a snapshot on the financial condition of business at a specific point in time. And here we have some component. We have assets, which are resources owned and controlled by the business. And these resources can be used to create a goods or can be used to provide a service, and they are meant to generate a profit. And these assets may be further classified into current asset and non-current asset. Again, we have a component of liability. That signifies the amount the business owes to its lenders and the other creditors. Liability are further classified into current liabilities for less than 1 year, and more than 1 year is long-term liabilities. Then we have the shareholder equity or capital. Is the residual interest in the net asset of a business that remain after we deducting its liability. So this statement of financial position is very important to investors and the creditors as it gives insight into company financial strengths and health. To also use it by internal management to track and improve operation over time. So the second statement is the statement of profit or loss, also known as income statement or profit and the loss statement. It summarizes the revenue, cost, expenses incurred during a specified period, maybe during a year or during a month. It provides information about a company's ability to generate a profit by increasing revenue and reducing cost or both. So here we are justifying the difference between the revenue and the sum of the cost and expenses to arrive to the company either net profit or loss. And this statement is crucial for investors, creditor, and the company management, as it is providing insight into the company financial performance and the other statement is the statement of changes in equity. This statement shows the changes in capital of the company during a reporting period. It shows the sources and the uses of equity such as share capital, share premium, treasury share, retaining earning, dividend, and other comprehensive income. It is reconciliation of beginning. So it just reconciles the beginning equity and the ending equity balances. So some of the purpose of statement of changes in equity are to provide a detail about the movement of the equity account that are not available in other financial statements. It helps the shareholder and investor to make informed decision about their investment. And sometimes it allows the analyst and the other readers of the financial statement to understand the factor that resulted into the changes in capital. So the fourth statement is the statement of cash flow. It's a financial report detailing a company cash flow during a specific period, assessing liquidity, solvency, and financial performance. They're also focusing on the cash sources and the uses. So the cash flow statement consists of cash from operating, might be cash from investing and the financing activities. And we exclude non-cash activities. So to create cash flow statement, we calculate cash flow from operating activity, investing, and the financing activity. They add up the net change in cash and the cash equivalent. So analyzing a cash flow involving examining cash flow ratio like operating margin and the debt that gauge a company solvency, efficiency, and the profitability. So, but what we are going to cover, which is in our learning content, is the statement of financial position and the statement of profit. So starting with the statement of profit or loss, a key component of statement of profit or loss is just a revenue and the cost. A revenue, these are earning from the company main operation. It might be a sale of goods or services. And the costs are the expenses directly related to production of goods or services. The expenses also are the costs not directly tied to the production of goods or services. They might be administrative and the marketing expenses. So how do we arrive in a gross profit? The gross profit is the difference between the revenue and the cost of goods sold. And the net income is the difference between gross profit when we deduct the operating expenses to show how much money the business has made or lost during the particular period. So most the component comprise nominal. Most the component in a statement of financial profit or loss, they comprise a nominal such as sales, salary, etc. So you have to identify, as you can see, when you classify account, we have a personal and the impersonal. So these personal account, they have a natural person, like this account, and artificial, like a TANESCO account. All these, the item of statement of financial position. And the representative personal account, like rent outstanding, these are items for statement of financial position. Again, even the real account, those tangible and intangible, like a furniture account, goodwill account, patent, those also are items of the statement of financial position. While only nominal account, such as sales and the salary, are an item for the statement of profit and the loss or loss. So let's take an example. If you are being given by a trial balance, so the first step when you are required to prepare income statement and a statement of financial position. What is needed also to identify which account is a nominal account so that it can be presented into statement of financial income statement, and those items to be presented into statement of financial position. So capital Capital is a personal account. This is an item for statement of financial position. Plant and machinery, these are real accounts, statement of financial position together with furniture. So sales and the purchases, these are an item for, they are nominal account. So they will have a place on income statement. Returns, these are a nominal account. They will go directly to income statement. Opening inventory, this is a real account, but a real account is an item not to go to the income statement, but it goes to the income statement because we want to calculate the cost of goods sold. So it is only because we want to calculate the cost of goods sold, that's why this item appear on an income statement. But discount, these are a nominal that they are directly go to income statement. Account payable and account receivable, these are personal account, and they go directly to statement of financial positions. Salary, carriage out, rent, these are nominal, and they go directly to income statement. Cash, this is a real account, and it goes to statement of financial position. Commissions, these are nominal accounts, and they find a way to income statement. So preparation, see the preparation of income statement. So income statement, we start with those nominal account. And if you can see, we have a sales, which is a nominal. And the less return inward, you get a net sales, a less cost of sales. And this cost of sales is what is calculated between these assets. For instance, opening stock, add purchases, less return inward. So we get a net purchase, and within net purchase, if we add opening stock, we get goods available for sale. And from good available for sale, we less closing stock, so that we get a cost of goods sold. So it is only cost of goods sold that is meant for a nominal account, and the closing stock will find its way in on a statement of financial positions. So again, after having a gross profit, we add other income, commission received, discount received, to get our total income. And this total income, we deduct operating expenses. Operating expenses, salary, carriage outward commission, rent rates, and the taxes, and the discount allowed. So that we remain, these are total operating expenses. Total operating expenses, if we deduct our gross profit, total income, deduct total operating expenses, we get a net profit. And this net profit will be transferred to capital. And on a preparation of statement of financial position, as we have said earlier, that include assets, liability, and the capital. So the asset, very easy, that we have a plant and machinery, furniture, these are total assets. And we have a current asset, inventory, cash, and account receivables. So these are our total assets. So these total assets are financed by capital, and we add a net profit, and we add also a current liability, which is account payable. So at the end of the day, that is how we prepare a statement of financial positions without any adjustment. So lastly, we are going to attempt the assignment number 3, and this will have a 1 mark. And this assignment is found in para 7.2 on a review question number 1 and 2 in a handout provided. And this one is to be submitted on 1st December 2023. And also get well prepared to similar questions on forthcoming test 1 scheduled on 29 November 2023. Thank you very much for your attention.